Enphase Energy reported their earnings yesterday, and the stock fell off a cliff, down 25% in one day. We'll discuss the Q1 earnings, which came out yesterday. More importantly, with this company, we'll talk about the Q2 outlook, which really seems to be what is sending the shares reeling. We'll talk about how the Q2 outlook spills into, obviously, Q3, Q4, Q1, Q2 of next year, and these revenue estimates that need to be met in order to maintain a relatively lofty valuation that this has on both the earnings and the sales side. Many analysts chimed in today. We'll run down many of the major ones, and then we'll get into the numbers. We'll take a look at the gross margins, take a look at the revenue. We'll look at it year over year, but also quarter over quarter, as well as the company gives you insight into that, the revenue, the balance sheet, the cash flows. And then more importantly, I think we're going to look at this from a technical perspective as well. Anytime you have one of your stocks drop 25%, this doesn't just apply to Enphase Energy. You get a 25% drop in one day, I would hit the pause button. Some investors follow the 3-day, quote, 3-day rule. We'll talk about all of those things as it relates to Enphase, and we'll talk about, is this a busted growth stock? Is this one headed much, much lower? We'll talk about that from a technical perspective and back it up with a little bit of fundamental analysis as well. Now, over the last year, you're still up 6.5% on this one. That's despite the 25% drop. But year to date, this one has crashed down 35%. That's on the heels of those Q1 earnings, which came out after the bell yesterday. Revenue coming in at $726 million. That was a fantastic 64% increase on its revenues year over year, and it beat expectations just fractionally by about $5.5 million. I went back and looked their guidance, because what I wanted to see is we got Q2 guidance for this company. We'll talk about the range that they gave. What I wanted to see is the range they gave for the previous quarter. Does this company really sandbag things? This company just lowering expectations. They gave you between $700 million and $740 for this quarter, and they came in at $726, so just past kind of the midpoint. Now, when we start to look at Q2, they gave us a guidance range of $700 million to $750, and when you look out to analyst estimates, they were expecting something much, much better than that. $730 million is essentially the midpoint. The low end was $711, the high end $746. Some of these might even moved around since yesterday. Certainly, if this stock comes in closer to $700 million rather than $750, that is going to have some investors very, very concerned. Now, a lot of analysts chimed in today. Bank of America lowering and downgrading Enphase to an underperform from a neutral weight, lowering its price target to $169, which is effectively where the price is today. They were at $227 on the stock. BMO Capital maintained its outperform rating on the stock, but lowering its price target to $275, saying the company had a cautious tone on its U.S. growth and was more downbeat than expected. Wall Street analysts saying that the sell-off in Enphase Energy is overdone, as lower guidance around its Q2 is temporary and sales will increase in the second half as a third generation of battery is released, and that the core microinverter business, which this company has a dominant position in, remains solid with Q1 shipments exceeding consensus and Q2 largely in line. Cowen kept its outperformance rating, saying that the U.S. residential solar market is facing some near-term challenges, but the company might be able to work through them. And finally, Raymond James saying net metering reform out here in the beautiful state of California will create some Q2 headwinds, but the company is doing well in Europe. Now, out here in California, which is a key market for any solar provider, including Enphase, I don't know what the legislation is doing 90% of the time out here in California, and they essentially reformed the rules out here to benefit the power companies, which have started large wildfires that have killed hundreds and ruined a lot of land out here. Well, they got a break from the legislators, as you're not going to get as much money as you feed power back into the grid from your solar system. Now, some experts believe this will increase demand for those battery units, although those are relatively expensive, and a lot of people buy those on credit, and with interest rates rather high, this company relies on people taking out credit, and as you know, the Federal Reserve trying to put a stop to that. Now, when we come over here and look at the financial results year over year, it's just going to look spectacular, from 441 million up to 726. But what you are seeing is starting to flatline from a revenue perspective. Back in Q4, we had $724 million worth of revenue, up just fractionally to 726. However, this company is maintaining, if not expanding, their gross margins. Year over year, you went from 40% up to 45. Even quarter over quarter, you went from 43 up to the aforementioned 45% gross margins on this company. That is a good sign. Now, further examination of those financials is you have this $726 million in net revenue. We talked about how it's relatively flat quarter over quarter, just up $2 million, but your cost of revenues are actually down because you expanded those gross margins. So your gross profit up considerably from 310 last quarter, 326. I mean, year over year, you're just explosive on this. But the guidance for Q2 and likely looking out into next year, we're likely to remain in this range probably for a little while with Enphase. Now, the company does a fantastic job, though, controlling their operating expenses. Research and development from 50 up to 57. Your sales and marketing up just fractionally. And again, I am looking at this quarter over quarter. Year over year, it's spectacular. But again, nobody's buying this based on the year over year results. It's more kind of quarter over quarter, and what we're looking at over the next couple of quarters. General administrative stayed flat over the last quarter, and even flat and down year over year. Very impressive from this company. Total operating expenses coming in at 158. So you take your 326 minus off your 158, and you get your income from operations coming in at an impressive 167. In the fourth quarter, we were at 156 million. Last year, we were $100 million lower at $61 million. Now, the company did have to pay more income taxes this year, so it drove down their net income despite higher revenues, higher gross margins, and higher operating profits. Now, when you flow down here to the balance sheet, they do have a healthy balance sheet. What I would love for this company to have done, now hindsight is 2020, to raise like billions of dollars back when the stock was higher. Now, that would have sent shares lower, but it would have gave this company a little bit of a war chest, because look, if Enphase is struggling to grow, then the rest of the solar providers, the battery makers, the microinverters, they're going to struggle a little bit over the next 12 months as well. Nobody is going to be picking up market share. It'd be awesome if we had just a boatload of cash here sitting on the balance sheet to go buy up and consolidate and roll up the industry. That would be exciting for me as an Enphase investor. As these growth rates start to stall, as we start to look out Q3, are we really going to do $780 million of revenue or 23% growth? If we start looking out into next year, 800, 900, $1 billion worth of revenue comes under some pressure and under some questions from investors. Are we going to be able to maintain kind of a high teens, low 20s growth rate on this stock for the foreseeable future? One way to do that is go buy that growth. Go buy some of these other struggling solar stocks. They still have plenty of money, and they could leverage the stock as well in kind of a stock or cash deal. That would be exciting. So if you're in Enphase and you're holding through this, you didn't have a stop loss or you didn't cut bait, you are looking for press releases and rumors and news that this company is going to consolidate the industry. That would be exciting. Now, what's also exciting is this company produces a mountain of cash flow, okay? Off $146 million worth of net income. In the quarter, they produced a massive $246 million of operating cash flow. Last quarter, it was $250. Last year, it was $102. Now, they don't have to spend a lot on property, plant, and equipment, just $20 million. On the investing side, you see this massive $695 million, but that's purchases of marketable securities. As you see over the last year, they have bolstered up, or at least from the beginning of the year, they have bolstered up their cash position over at this company to the tune of over, we'll call that $1.8 billion. It's just slightly less than that. In December, they were closer to $1.6 billion. Very financially healthy company from a cash flow perspective, from a balance sheet perspective, and the fact that the gross margins expand in a difficult selling environment should give some comfort to investors that are holding into this one for the long term. Now, we had a massive drop in this stock just over the last day, down 25%. We'll put in a kind of a big fake red candle, although there is a gap there. that will likely get filled at some point. A lot of investors have what they call a quote 3-day rule. Whenever you have a massive shift in a company's stock price like this, I would give it 3 days. I wouldn't even think about buying this stock until really Monday of next week. Couple of reasons why. In the micro trend, you have been making lower highs, lower lows. That is what they call a downtrend. I don't want to buy a stock in a downtrend. In the intermediate term, you've been making a series of beautiful higher highs, higher lows, and that intermediate trend could show up and could provide some support. So instead of being on this type of uptrend, maybe it shallows out, but the key lows that we're looking for were made back here in May of last year. You would not want to see this stock get below about 137. That would take out these lows, essentially eliminate that type of uptrend. Now, for the slightly longer term, we're looking at over the past 2.5 years on this stock, it's kind of gone sideways. There should be some demand for this stock down here at about 115. I put our green box on this one, which you will see when we click through like our FANG stocks. It's kind of a buying zone. When a stock gets to the top of the green box, that is when you can start maybe inching in. That would be about $150 per share on Enphase. Any deeper than that, you have to understand that the intermediate technical pattern will have been broken, but there should be some demand for the stock at about 115. Very conservative investors or investors that are very prudent and wise will want to set a stop loss right here at about $100 per share. You would not want to see this one break below 100. You break below 100, there is not a lot here that I could see holding the shares back, and this one could really take a dive. I repeat, I would not buy shares of this one until Monday of next week at the earliest. Get this one a chance to cool off. Given the trend that we're on and the steepness of this drop, I actually expect lower prices on this one. The first area where I would look at this one is probably at 150. Enphase very prudently managing their growth. You would like to see this company take advantage of some of the other distress that might be out there and maybe roll up some more of the solar business in one of the only investable companies in that space. Market cap sitting at about $30 billion, still rich from an earnings perspective and a sales perspective. So the company is going to have to maintain and reaccelerate this growth rate. And again, I think the best way to do that is through acquisition. Hopefully you guys enjoyed today's video. We'll be back in soon with more. Good luck with your investments.